Let's talk about investing. I'm Nate, I'm the FitfutureMD, I'm the owner of Ensorsale.com. Make sure you go check it out, 20% off using code FitfutureMD. Make sure you like the video, subscribe if you haven't. Appreciate it, it helps the channel. So let's get started. So you want to be an investor, right? Basically when you go and you realize that when you're a normal person, right? So you work a 9 to 5, that's 80% of people, right? 80% of people are gonna work a 9 to 5, make less than $60,000 a year. Eventually you come to this realization that the only way for you to get out is to invest, right? Now, there are 3 different types of investing, right? There's short-term, medium-term, and long-term investing. Now, I talk about this a little bit in the Millionaire Fast Lane video back in the day, but the truth is it's gonna take 30 years, long-term investing, for you to get out, right? So, but if you're starting at 18 years old, that's 48 years old, and you're sitting there and you're free, right, at 48. Now, you could be the sacrifice generation, whatever you want to call it. But most people are not going to do something without a reward for 30 years, right? They're just not. That's why the government started basically stealing your money with Social Security, putting it away from you, right? It's because they don't believe that you would invest for your retirement, right? Like they're just not gonna trust that you're gonna do that, right? So, but the truth is, long-term investing is definitely, to me, it's like the backup plan, right? And most people do this through their 401ks, IRAs, tax-deferred, what are called tax-deferred accounts, right? So if you're a person that does that, that's good. I am a person that does that as well, right? So long-term investing. Medium-term are things that are going to pop, within a year or 2 years, right? And you do medium-term investing because of tax implications, right? So basically when you get to a certain level, like say if you're starting to put 100 grand into stuff, 200 grand into things, those tax implications are big time when you sell, right? So that's really what medium term is for. And I consider medium term 2 years or less, long term 10 years or more. And short term can be anything from a day to a month to 2 months, right? So what am I currently doing, right? So obviously through work, you have a 401k, I have retirement through work, a pension plan, right? So they take 6% off the top, match it with 6% and 6% into the 401k matched, right? So that's basically 18% right there in long-term investing. Now, I also long-term invest in a Roth IRA separately from that, right? And basically I do that on money that I make. I do a percentage on money that I make off of medium and short-term investing, right? So the biggest problem when you start talking about day trading or short-term investing is getting to a point where you can actually do it, right? Because they made it where you can't do it unless you have $25,000 or more in your brokerage account, right? So, and a lot of these guys on the internet right now are basically pushing like, being staked, right? Well, the truth is you don't want to be staked in something without enough experience to get to the $25,000, right? You basically want to know what you're doing and been there before and that kind of thing, right? So that's when it comes to day trading. So what you basically do with day trading is, if you're starting out with $1,000, you got to get to 25,000 as fast as you can, or you got to save 25,000 as fast as you can. And for most people living paycheck to paycheck, saving $25,000 ain't gonna work. So you're basically flipping the $1,000 until you get there, right? So, and we can talk about that, how to do that later, but that's basically what you do to get to the 25,000. It usually takes about 2 to 3 years to take 1,000 to 25,000, right? And there's people that say that you can do it a lot faster than that and all that. And you get to 2,000, you can use margin and all that kind of stuff. We'll talk about that later, but you know, it's high risk, but you have no money anyway, right? So when you're doing high risk things and you're already broke, you're already broke, right? So keep that in mind when they start talking about taking risks. You just don't want to take risks with debt, right? Because you don't want to dig your own grave. You want to, dig the hole, or I don't know how to say that, but you don't want to dig your own grave, right? So that's what debt is. Debt digs your own grave. So basically, what am I currently doing, right? So I currently have 401k, pension, Roth IRA for long-term investing. I'm probably going to open up a separate brokerage account for my short-term and medium-term trades. What's really cool about Schwab or TD Ameritrade is that I can trade pre-market and aftermarket. But keep in mind that when you trade in pre-market and aftermarket, you're trading against professional people, more people that know what they're doing, right? Whereas when you trade during the day, you're trading against retail people that don't know what the fuck they're doing. So just keep that in mind. But basically, you're going to have a mix of short, medium, and long-term investing, right? As far as the stock market goes. Let's say I'm not a person that really does the bond market currently. I can leave that to my retirement accounts, right? But there are people out there that are just good with whatever the bonds are yielding, and they consider that safe money because they're betting on the U.S. government, right? But this is how you get started personally, right? So you got to say, how much time am I willing to put into this, right? Because if you're only willing to if you're just willing to put in the money and it just be invested, you're going to be looking at, 5 minutes a week just to open the app and say, okay, I'm still making money, right? That's long-term investing at its finest. And that's really what people are pushing on the internet right now, right? They're pushing, putting it into an index fund. They're pushing, basically passive investing, right? And there's nothing wrong with passive investing. At 30 years, you'll be a millionaire. You can do the math. 30 years, possibly you can be a millionaire, right? Possibly, right? Because the market does go up and down, right? They say the long-term trend is still up, but that's really it could just be keeping up with inflation, right? So you just, keep that in mind as well, right? The dollar purchasing power has gone down, right? So, but it's better to be a millionaire, than have nothing, right? That's what most people are going to end up with, is nothing. They just live on Social Security. And that's just not going to be enough, right? Not in this day and age. So keep that in mind. But how you get started is basically you open a Schwab account, right? I use Schwab. It used to be TD Ameritrade, but now it's Schwab and Charles Schwab. And I use the Thinkorswim to trade, right? It's easier. They're going to have all the research up there. You just start reading it a little bit every day. Research the companies you think about. I would personally look into what does the best investor of all time do, right? How does his strategy work, right? And so that's the strategy I pretty much use in my long-term investing, is his strategy. Now, short term, it's a little bit different. Medium term and short term, and basically because of the pattern day trading rule, you have to start with the medium term, right? So you only have 3 day trades a week, right? So you need to I figured out stocks that are trending up for the week. They're going to be trending up for the week, right? So you trade them weekly, right? Instead of trading them daily. So that's kind of how I got started. Like I say, we'll go into more details on specific stocks and stuff like that as the time goes on. Right now, currently, I'm trading Apple, I'm trading Nvidia, I'm trading Tesla, and I'm trading AMD. Right, those are the four stocks that I'm looking at currently. Everybody likes the QQQ and SPY, but those are like, $5,000. They're like higher, right? QQQ might be lower than that, 3 something, but you have to trade within how much money you have, right? And really how much money you have really shows you the level that you're on, right? Don't think that you're on some higher level when you're not, right? Just because you have a strategy, you figured out that it's working, right? You still stay on the level that you're at, right? And that's because you're gonna go up a level and then you're gonna get burned, right? It basically happens to everyone. It's probably gonna happen to you, right? You end up losing $4,000 in a day or some crazy mess because you tried to go up, right? And you make a mistake, right? The reason I like trading the S&P 500 is because when you make a mistake, the mistake usually corrects itself over time, right? So, for instance, right now I think Tesla's trading at like 184 or 183. But so say you bought at 176 and it dropped to 169, you basically still made a positive trade, even though you were incorrect medium term, that it was, even though you're incorrect on the day, you bought 176, it went to 169, you're down $7, you're like, shoot, well then the next week it popped to 184, right? Because it's the S&P 500, and basically everybody's retirement accounts are buying into those stocks, right? So it can basically bail you out when you make a mistake, but you still learn from your mistake, okay? I'm Nate, I'm the FitfutureMD. Obviously this is not financial advice. I'm not a financial advisor. I'm not financially advising you. I'm just telling you what I'm doing, and giving you information on long-term, medium-term, and short-term trading, right? Investing. Obviously educate yourself. You can lose money at this. 80% of people do lose money at short-term and medium-term trading. That's why everybody tells you just a long-term trade, right? But there is 20% of people that do make money, and I'm one of them. So I'm Nate. I'm the FitfutureMD. Shop at Ensorsale.com, and we'll see you in the next one. Peace.